In today's video, I want to chat to you guys quickly about how to fund your business. My name is Heinrich Geweer from SA Accounting Network, and I've been an entrepreneur since 1993, and I've been in the accounting industry since 2008, more or less. So I think over the years, I've helped about 550 different companies just in different areas of their business. And I think when it comes to funding a business, I think it's one of the biggest questions that people always ask is, where do they get the money? So that is what I want to unpack a little bit. Remember, I'm busy with the business mentoring course. This is part of the second phase, and although it's a bit of an overlap when we did the financial planning part of the first phase of the business course as well, I think it's just worth it just to pause and just stand still a little bit on this topic, because it's such an interesting topic and people's got so many different opinions about how to fund a business. And before I jump down to my presentation, remember to hit the like button, remember to hit subscribe, and let me quickly show you guys what I've put together, just some of the experiences and stuff that I've seen over the years. Yes, so let's talk about funding your new business. And I think, remember in the previous video or the previous part of the course, we were just talking about the whole thing about the metaphor of a house. And I think a house is such a cool metaphor to use when it comes to business. Obviously, you never just start building a house just because you feel like you want your room. There's obviously a lot of planning that goes into planning or building a house. And I think with a business is the same. You don't want to start and then halfway out you run out of money. So I think the funding thing is really, really important. And we did cover most of it as well when we talked about the business plan in some of the previous videos. So yeah, so I think when you build a house, obviously building a house, you need a budget. You know what the house is going to cost you to set everything up. And it's the same with the business. You need to know how much money you need before you actually start building. You need a financial plan before you start building can begin. And it's about securing enough resources. And I made a note here to say a hardware story. So this is an interesting thing that I came across. It was not actually one of my clients, but it was a talk that I had one day with a business owner whose business failed. And I think they bought some hardware franchise. I can't remember what the name was. It wasn't a familiar one. It was definitely an unknown one. And I think if it was a familiar one, the business probably would have still been surviving today. But what these people did is they helped them to structure the setting up of the hardware, and they gave them a certain amount of money to set up the hardware itself. But in their financial planning, they never put enough money in there to cover the expenses for a certain period of time. So they put all the effort in, they did all the shop fitting, they bought all the stock and stuff, and all of a sudden they ran out of money. So I think their hardware still ran something like 2 months, and they had to close it down. They never had enough money to survive for the next, let's call it 6 months or so, until their hardware becomes established. So I think that is a hard lesson, just from a practical experience of one of the things, one of the real life stories that I've seen, just as an accountant over the years. So yeah, so it's really, really important to have a proper financial plan before you start with your business. You don't want to start running out of money. Same as a house. If you just think about how silly it is, if you build a house and you get your roof out and all of a sudden you don't have money to put the roof on, or you build a shell and all of a sudden you don't have money to paint the place or something like that, all your neighbors are going to laugh at you. So it's the same with the business. You must make sure how much money you need so you can execute on your plan. Yeah, so let's quickly jump. Where's my second slide? Oh, here we go. So what do you need? So I think you need to revisit the financial plan worksheet and the break-even analysis. So remember in the previous video, we stood still a little bit on that. So I think that's really important. You need to determine what your startup cost is. And then obviously you need to determine what your operational expenses is. And then from there, you need to work out more or less a buffer. Let's say 6 months operational expenses plus your startup cost. And then obviously you will get to an amount of your total funding required. So I think funding options, first one, personal savings. And I think in South Africa, from what I've seen, probably 95% of businesses use their own funds, because we're going to talk about the other options as well. But for a startup business, it is so difficult to get finances. You can have a brilliant business plan, you can have a brilliant business concept. And I've seen it over the years, people that's contacted me, then they've got the brilliant design, everything is perfect. And then they go see investors and the guy says, I want to see something that's working before I will even be willing to put money into it. So yeah, so that's why, once again, one of the reasons when we were talking about the business plan part is during the testing phase, to test your concept on a smaller scale, to see whether it's viable and perhaps build it up from there. Yeah, so funding options, personal savings, we'll stand still a little bit over there. We're going to talk about bank loans, crowdfunding and angel investors, and obviously government initiatives. When it comes to personal savings, or personal funding your business, the most common one is savings. So a lot of people save up money, and then they use some of their life savings to start up businesses. And just maybe want to stand still on this as well. I've seen it from my personal experience with clients, is that people that go on pension, they get a lump sum from the employer. Let's say, for instance, R1,000,000. I'm just taking that as an example. And then all of a sudden they say, okay, I'm going to start my own business. And I remember the one situation, there was a guy that I helped with many, many years that started something about something technical, about something like a mobile mechanic or something like that. And this guy got, let's call it R500,000 back then as a lump sum payment from a pension fund or something. He bought himself a car and he bought himself some tools. He put a little bit of ads on. But yeah, I think within 6 months, that guy just burned through that money. He didn't control. And the thing is, that's his life savings. That's his pension fund that he messed around. Another sad situation or case that I also heard about was actually a friend of my father-in-law who also went in retirement. He got a nice lump sum. He took that money, he bought some takeaway shop, and I think 6 months later he fell ill. And the people who were managing the shop, they just took the money. They never declared all the income and stuff. They just told him, they stole all his stuff. So he ended up losing his business, plus he lost his pension. So I think when it comes to savings, you need to be really, really wise and just think about what the risk is, especially if you take stuff like life savings, to invest that into your business. You need to be very, very careful if you do those type of stuff. The second one is family and friends. I think with family and friends, that's also a big risk. The Bible teaches us that the borrower is a slave to the lender. Yes. So you must just be careful. I think it can make family situations very, very complex. I'm busy dealing with one of my clients now who borrowed money from his mother-in-law, and things are going south at the moment. Things are busy not working that well. Even with friends, I had a situation now as well where two friends got involved in a business. The one guy was, I wouldn't say was struggling, but he got a friend who got involved, and now all of a sudden they realized this thing is not working. And now for them to try and save their friendship, I think that is the most important thing. So family and friends, you must make sure that you put proper boundaries in place and follow the proper procedures when you get involved, with friends and family's businesses. And I think the third option is just to grow the business generically. And I think I did touch on that briefly as well. So if you start a business, start with what you've got. I heard a really interesting analogy. I think it was yesterday I was listening to a talk where the guy was talking about when you go to war, that the troops must never advance faster than what the ammunition and the fuel can go. So as soon as you grow your business faster as what your resources are that you've got available, your business is going to fail. So same when we go to war. If your troops outpace or go faster than what you can supply fuel and ammunition to them, you're going to lose that war. So same with business. You can't outgrow your finances or the money that you've got available in a business. So that was an interesting analogy. I just thought I'd share that with you guys. Banks, here we go. So banks is, I think, obviously also an option that people have for new businesses. And the first one that I'm going to put out there that I've seen over the years that it does work as well is if you take money out of your home loan. So people who own a property, you can get an advance on your home loan. Let's say, for instance, 100,000 rand or 200,000, R1,000,000 rand, doesn't matter what it is. You can take the money, put it into your business as a director loan account, and then after that you can, once the business makes money, you can take it out again. So it is an option. Once again, it is risky because if something goes wrong, then you might end up paying the consequences for that for many, many years. And the second one is credit cards and bank overdrafts. I've seen that as well, where people have a personal overdraft. They take a certain amount of money, invest it into a business, and as the business makes money, they take it back again. Bank loans, like I said, that is something that you could consider, but it is a tricky thing, especially if you've got a startup business, because you don't have any financial records or financial history to go to the bank to say, listen, this is what happened for the past 3 years, and generally, I'm just talking generally as well, that I've seen over the years, past 15, 16 years as an accountant. If you go to a bank and you have any form of a business and you want to apply for finance, they always ask for 3 years financial records. So you need to be able to prove that your business is trading and that your business is making money and that your business can afford the repayments for whatever it is that you want to buy. So that's why banks is a really difficult thing, especially if you've got a startup business that's got no records or no history, financial history to actually get finance for that. Then asset finance, so that is also quite an interesting one as well. So if you've got some form of a business where you use vehicles to do deliveries or motor vehicle repairs or whatever it is, then you can go to finance houses like Westbank and Absa and those guys and say, listen, I want to finance this vehicle. Once again, if your business doesn't have a financial track record, the chances that they're going to finance it is very, very slim. So normally in those type of situations, here's the business owner would then have to sign surety for the finance. So those, I think, is the banks that covers that. I think I'm just going to touch briefly on equity and other funding as well. So we're going to talk about crowdfunding, or let me just give you the options. Obviously, crowdfunding is one of the options. I had a client now that went through a bit of a crowdfunding campaign, and I think it can work. I think if you look at some of the overseas stuff, there's definitely some value of some businesses who started through crowdfunding. Angel investors, I think there are people out there that's willing to put money into businesses, but once again, they generally won't put money into a business that's not running. I've seen it over the years that most of the people are very skeptical to get involved with those type of stuff. And then you get venture capital companies as well. So that is also something that is definitely worth doing some research on. Then government initiatives. So I think this is probably one thing that you could consider. I think over the years, since 2008, I think I've only seen 2 businesses out of 550 companies that I've worked for that managed to get some form of a grant or some funding from government agencies, but it is an option. It's definitely worth exploring. So yes, so there's different organizations. You get the NAYEDA Fund, you get the Ezavandi Women's Fund. If you go look at CFund, IDC Development Finance, NEF, the Black-owned businesses funds, and then obviously business incubators. So that's also something interesting that I've seen. We live in Cape Town, and I was involved with a business incubator program a while ago, and that's quite exciting to see what these guys are doing. So they're taking businesses. So these guys have got this big complex, and they're teaching people ground level stuff when it comes to businesses: how to be a hairdresser, how to do nails, how to do construction, how to do bakery stuff, and they taking young people out of the townships, and they're developing them, they're giving them the skills and stuff. So the business incubators is definitely also a good option for getting business finance, or just to get a business off the ground at least. So just things of that you need to consider as funders require proper business plans. I think the cost of capital, you need to consider that as well, as how much that money is going to cost you. You know, a lot of people go to places and they get finance from places. I've seen it now recently with a point of sale system that actually gives finances to business. So one of my businesses, I think he borrowed about 100,000 Rand. And I think they charge something like 35,000 Rand worth of interest on the 100,000 Rand that he borrowed. So there's definitely a cost involved when it comes to borrowing money from any form of institutions. You need to be careful for there, and obviously terms as well. A lot of people say, I'll give you the money, but I've got to get it back within 3 months or 6 months, whatever the case might be. And those are all things that you need to take into consideration as well. So the cost of capital is really, really important. And once again, it's important you have the right amount of capital as well. If you think about, I'm just going to take an example. If you have a business plan, you need to set it up 6 months operating expenses, and you need R1 million. Obviously, if the interest rate is 10%, you're going to be paying 100,000 Rand worth of interest throughout the year. So if you then go to somebody and they give you 5 million Rand, now all of a sudden, instead of you having to pay 100,000 Rand worth of interest, now you're going to have to pay 500,000 Rand worth of interest. So there's a cost involved, and that cost you're going to have to carry. So you must make sure that you get the capital at the right interest rate, and obviously the right term and the right amount of money. That's really, really important. Next one, equity and control sacrifice. So that is when you get partners and stuff into a business. So quite often people will get together into a business. Let's say, for instance, you've got an existing business, you know there's room for expansion, and you want to get an outside party to come invest into your business. So a lot of people forget the control that they have to sacrifice for that money to get into the business. So where previously you as a sole owner of a business, you had free reins of what you can do, the decisions you make, how you invest your money, what you spend on marketing, all that type of stuff. Now all of a sudden, if you bring a partner into that business, you have somebody else looking over your shoulder and asking questions about every single thing that you spend expensing for the business. I think that is sometimes quite a big stumbling block for businesses, for small business owners to get past that. And the equity part is also really important. People forget about that. They say, no, I'll give you R1 million for 50% share of your business, and everything is fine until one day when they actually start looking at selling the business. I do remember in one of my cases, there was a business that owned a certain asset. I think the asset cost him 3.5 million Rand. And somebody came, and so there were 5 partners in the business. So somebody came and they wanted to offer them something like 10 million rand for that same asset. So the original owner of the business, with all might, he just wanted to get rid of the other partners because he knew that if the other people stayed in the business, he would have to share the profit on that. So those are the type of stuff that you need to consider when you get other people involved. As what is the price in terms of equity, what control are you giving up, what the interest is going to cost you. And then I think, last thing is timelines and eligibility. So you must make sure, set yourself a timeline, look at eligibility. And I think in the description of the video, there's a link where you can go download the worksheet where I address some of these things, the little worksheet with tick boxes, so you can print it out and keep track of what you're busy with and where you are with those. I think, yes, action plan, here we go, and steps. So work through your worksheet. Like I said, the worksheet is in the description of the video. You can go download it over there. List your top 3 sources of income. List your next step for each of those sources, and then set yourself a deadline. Yes, and I think from there, if you can just give the video once again a like, subscribe, and if you've got any questions, leave a comment below, and I'll see if I can get to those questions for you. Like I said, financing is such a big thing, and it's probably one of the biggest hurdles for any business, is where to find the money to get your business going. Thanks for watching. I'll see you guys at the next video.